Welcome back, accounting boffins. We're busy with VAT, value added tax. A quick recap. Remember we said the current rate of VAT is 15%, right? We said that VAT is levied on goods and services. We said you have zero-rated items, you have certain exemptions on VAT. We said input VAT is a VAT that we pay as a VAT vendor, which we can claim back from SARS, and then you have output VAT, which is a VAT that we collect and we pay over to SARS. These two items fit into your VAT control account, which will either end off with either a debit balance or a credit balance. Right, but obviously more about that later. For now, just remember that your VAT control account actually indicates to you the amount that either you owe SARS or SARS owes you. Okay. Now we said that VAT is levied on goods and services in our country, right? We said that VAT is paid on the supply of goods and services. That means if you are a VAT vendor and if you're buying goods, you're going to be paying that VAT, right? The business are obliged to charge VAT on behalf of SARS, and that's an important point. When you're selling the good or the service or providing the service, you're going to charge VAT on that sale. That VAT that you are collecting on behalf of SARS and will have to be paid over to SARS. Keep that in mind. So once you pay that amount, we said will have to be paid over to SARS. VAT is charged on taxable goods and services. Okay, you will see therefore that since 1991, when VAT was introduced in South Africa, right? Obviously, it's an act of parliament, and therefore, it is something that we have to comply with. Any person who runs a business with a turnover greater than a certain amount, which is, you'll notice, also adapted and changed from time to time, within a period of 12 months, must register as a vendor. So you will see now, once you register, you called a VAT vendor. Okay, and if you're a VAT vendor, then you are registered with SARS. Obviously, the acronym SARS stands for South African Revenue Services. You will find that certain items are exempt from VAT. We said they are exempt from VAT. Now, what are these items? The category would be financial services, interest, life insurances, medical and pension funds, bus, train and taxi passenger fares. All of these are VAT exempt, meaning they will never ever be subjected to VAT. So keep that in mind. When we say they're VAT exempt, it means that they will never ever be subjected to VAT. Okay, then you get still dealing with exempt items. It's education services, the renting of accommodation for use as a private home, salaries and wages. All of these fall within the category of VAT exempt. That means there's no VAT that's left. That's what we mean by the concept of VAT exempt. Then you have other items which would be hobbies and private recreational pursuits, private sale of personal or domestic by welfare organizations. All of these fall within the category of VAT exempt. Okay. Continuing, we're saying that generally your goods and services that are not exempt from VAT will have a standard rate. And we all know that the standard rate is 15%. Items that fall within the category of zero-rated. So if an item is either zero-rated, and I think this is rated means that the item has VAT attached to it, but the rate at which it is being charged on that item is 0%. In other words, no. There's a distinct difference between zero-rated and exempt. Okay, so zero-rated has VAT charged to it, but the rate is 0%. Zero-rated. The second one is VAT exempt items. Those are items that will never ever have VAT in that particular transaction. Is 15%. Obviously, that is determined by the Minister of Finance, and that is the amount that can go up or down, depending on the needs of the country. Okay, now we come to items or services, goods and services that are zero-rated for VAT. This would include essential items, and this list depending on the needs of the country, right? So currently, what you would find on your zero-rated list would be beans, fruit and vegetables, paraffin, sardines in a tin, cooking oil, rice, milk products. Basic items that are used by consumers that are zero-rated, meaning there is VAT charge. Let's just clarify this point. There is VAT charge, but the rate at which it's charged is 0%, which effectively means there's no VAT. Have this concept clear in your minds. You got your exempted items, which will never ever have VAT attached to them, and then you get your zero-rated. These are your items where the VAT rate is at 0%. Okay, clearly understood. Right. Now, obviously, when you commit fraud, tax evasion, and at this point, allow me to explain the difference between tax avoidance, right? That's one concept. Evasion. Okay, let's look at tax avoidance first. Tax avoidance is perfectly legal. By tax avoidance, we mean that you, as a consumer, as a taxpayer, you are allowed to claim back certain items which will reduce you have to pay over to SARS, and that is what items that are accepted by SARS for you to claim back against them, and that's what we refer to as legal, no problems. However, tax evasion is where you are supposed to pay over to SARS and you evade. Clearly, that is illegal. It falls within the category of fraud, right? And is definitely punishable in terms of the laws of the country. So once it's legal, it's legal means whereby you reduce the amount that you have to pay over to SARS, but tax evasion, illegal, and definitely you'd be committing fraud. When we commit fraud, which is called tax evasion or tax fraud, tax evasion occurred when you do not pay your tax that is due, or when you claim a refund that you are not entitled to, right? Else in committing fraud. So watch, if you do not pay over, or you claim back a refund which you were not entitled to, or a transaction where you are assisting somebody not having to pay the necessary taxes over to the state, all of that would be fraud, and like I said, of the laws of our country. Okay, now, if you look at payment of VAT, some businesses have to pay VAT over to SARS on a monthly basis, right? a turnover of more than 30 million per year, right, can do a monthly return to SARS. That means at the end of the month, they determine whether the amount is due to SARS or a monthly return. Then you get bi-monthly, every second month. Any business whose sales is 30 million and less per year, this is the norm. Basically, in most businesses you would find that they do a second month, they do a return to SARS, whereby they then, because remember, you have to submit your figures to SARS. You have arrived at a certain figure which is due to them or due to you, right? So that period is called, the second one that we deal with here, month return. Then you get a 6 monthly return, right? And these are farmers with sales of 1 million and less per year, and they normally do it at the end of February and end of August, right? They do a 6 month of that particular sector of the economy. In this case, we're looking at farmers. Right. As a VAT vendor, you now have a choice. When you are doing your return, you can either use what we call the invoice basis or the receipt basis. That means, generally the rule is, will have what we call the invoice basis is the norm, is the one that is normally used, where a transaction is recorded. So when the invoice is issued, that's when the VAT is recorded. Okay? Meaning, you're submitting your returns based. However, you will get some businesses where but this you'll have to apply for, where it will then be based on receipt basis. That means you will only record the VAT when the monies are actually paid and received. But like I said, for our intents and purposes and for our curriculum purposes, you will only be expected to know the invoice basis. This is what we mean by the invoice based. It means that the VAT is charged to customers and is due to SARS when the invoice is issued to the customer. Can you see that? The difference is the moment the transaction takes place, the time when the VAT is charged to the consumer and it is then due to SARS. The VAT is paid to SARS before the money. If you had a credit transaction, you are liable to pay SARS, although you as a business, you haven't received the money from your customer as yet. The invoice based is the norm. Option, the invoice basis will automatically apply when you register as a VAT trader. Important. So if you register as a VAT vendor, immediately you know you are going to have to invoice basis. If you do not want to use the invoice basis, you have to apply in writing to SARS, explaining why and giving reasons why you want to opt for basis. If you look at your receipt-based transaction, it means that the VAT is only paid over to SARS when you receive payment either in full or in part. So very obvious, a receipt pay over the amount to SARS when you receive full or part payment of the funds. Right? VAT is recorded against all sales. Any VAT that they and the delivery of services is called output VAT. In other words, we said input VAT is the VAT that you pay and you claim, is the VAT that you collect and you pay over to SARS. Okay, so keep these concepts in mind. Input VAT. Remember we said the rate or the standard rate is currently 15%. It's controlled by the government and can be adjusted by the Minister of Finance at any time. Whenever the Minister reviews the economy of the country, the VAT needs to be adjusted. Obviously, that would be the prerogative of the government. Remember what we said? Zero rated, the percentage VAT is 0%. This is the VAT rate at any time. So in other words, if an item falls within the zero rated category, there could be a situation where the economy of the country improves to VATable. So those items that are currently zero rated, it can change. Or if the conditions in the economy worsen, more items zero rated items. And then obviously your VAT exempt items are those items that will never ever have VAT attached to that transaction. Okay? So what we said, exempted and from VAT are those items where no VAT on these goods and services at any time. Right? So your VAT exempt items means they are there, have VAT attached to that particular transaction. Okay, so that's it for this segment, guys. We've done a lot of theory, so make sure you understand this theory. We'll continue with the section on VAT. Let's take a quick break and we'll see you in a jiffy.